All right, guys, welcome here. It's show 150 on Crypto Voices. Matthew here, as always, from Eastern Europe, joined by my co-host Alec Harris from Eastern US. What's up, Alec?
What's going on, guys?
Not too much. Very happy to have our special guest today, Ben Prentice. I've known Ben for many years, actually, and had the pleasure of working with him a little bit, actually, on some What Bitcoin Did stuff as well, and he's doing a great job there. And also really enjoyed his last interview with Peter, and figured always good to talk about free market stuff with people that know what they're talking about. So that's certainly Ben. So Ben, thanks a lot for joining.
Hey, thanks for having me on, Matt. I reached out to you like so many years ago after just listening to your pod. I think I sent you like $25 or something, and you were such a cool guy. I thought you were so smart, and I've learned a lot from you about base money,
Go
monetary economics. No, seriously. So it really is. It's an honor to be here, brother.
Thanks a lot. Yeah, it's funny because time really does fly. And, I remember when you were, asking me about monetary based stuff, that was probably pretty early when I was putting that stuff out there. It's already been 5 full years now. And, it was before COVID, you're talking low 20 trillions. And now after COVID, it's 30 trillion. It's like $10 trillion like that of base money printed. So you never know. You never know what can happen.
Yeah, man. It's a wild ride.
So how do you want to start it? You want to talk about money, monetary policy, monetary theory as of late? Are you feeling good about gold during these rough times, or Bitcoin only?
Oh, well, I'm a Bitcoin only guy. I've actually never really like sold Bitcoin. I've maybe exchanged it for a few goods and services here and there. But I'm an accumulator of Bitcoin, and I'm not an accumulator of gold. Um, I have some gold jewelry, but that's about it. And the reason I'm not is because of monetary economics. So I mean, we could definitely start there. We I don't know if you know this or not, Matt, but I have this website about what happened with gold somewhere
Should have
around
put that in the intro. Yes.
1971. No, it's fine. That's often what I talk about on podcasts, so we can like briefly I think it's a good jumping off point for like, my thesis on Bitcoin, on money,
Mm.
which is it's kind of drawn me along my whole path too. So, the brief for people who don't know what we're talking about. Um, Started a website a while ago with my buddy Heavily Armed Clown. It's called WTF Happened in 1971. And it kind of just has a bunch of charts about like, what happened since we went off the gold standard, obviously. But that just having that website and then going on podcasts and really like it really the site on its face is just a big meme. It's just a bunch of charts with arrows on them. But it's really drawn me down the path to think like what happened, why. Finding some of those charts was like it took some kind of first principles thinking of like, well, what would change, what would you see an inflection point if we change the entire foundation of the monetary system. And that led us to understand like, well, gold, like even the gold standard itself is like kind of hard to understand. There's the Bretton Woods system, and there's the classic gold standard before that. And then you're just like this, oh, something happened in 1929 there. You could probably make a whole website of WTF happened in 1929. I've argued you can make a WTF happened in 1913 as well. You know those dates, Matthew?
I do.
So the establishment of the Federal Reserve. And then like we even had to go back further than that to really understand that the games that, and you touched on this in your episode, we'll shout out that as well on What Bitcoin Did. You touched on like the free banking era, where really whenever you saw problems, it was actually because of the government intervention, not the opposite, right? So they call this the free banking area, and then they point to all the problems that happen, all the banking disasters that arrived. That those were all from the suspension of redemption of specie in some form or another. Heavily Armed Clown goes. I'm going in through a lot of things, but we'll kind of bring it back together in a bit.
Yeah.
Heavily Armed Clown had developed like the understanding that bimetallism itself is a form of fiat because you're fixing the price of one to the other. So, like to really understand monetary history is necessary to understand monetary present, I think, and monetary future, because you like most people don't understand why gold failed. That's my favorite thing about this whole journey is that like if you talk to the Keynesians, they agree that gold failed, right, Matthew? They agree gold
Mm-hmm.
failed, but for a completely different reason than the Austrians. agree. So, like, I understand that gold failed as a monetary technology because people didn't use it. People stopped using it. Um, I want to give you a chance to jump in here, and so we can
No,
kind of
no, keep
focus the
going. Keep
discussion.
going.
But
Yeah, that's
um,
good.
another key point that was more recent in my journey that really like helped me articulate a part about this that's important to understand is and it was something I already had in my head, but Lynn Alden articulated it amazingly. She said that gold started to fail when information, you know, Bitcoin is information. Information started to move more quickly than money could, than base money could, gold money. So what did we start using was paper to move the monetary information more quickly, and it disconnected the media from what people were using. And so like my understanding now is that gold is a defunct, archaic monetary technology that we used well beyond really its useful lifespan, and that's what led us to fiat money. And Bitcoin is the only technology that I can envision with all this understanding of monetary economics that can bring us forward into the future. So that's a bunch of stuff. I don't know where you want to kind of dig in here, Matthew, but that's where I'm at.
No, I love all of it. Did you start WTF happened in 1971 like while you were well into Bitcoin or before?
Yeah, I'd say well in, like a year-ish into my journey, year and a half, something like that.
Yeah, yeah, but probably your Austrian journey or free market journey was before that, I
Just
presume.
before, yeah, it sparked it for sure.
I mean, it's the same with me. Like didn't start really down this rabbit hole until 2008. And I think that was the case for a lot of people, like just the cluster of errors in the economy and everything. Um, I actually think, just to throw this out there, I'll give a talk at BTC Prague this summer, and I'm going to focus on this. I actually think that in 1971 for sure was the nail in the coffin, but I think one of the real bad signs for gold was World War II, because in World War II, like there was 20-30% of gold only worldwide that was in the Federal Reserve, and maybe even lower than 20% actually. Can't remember now off the top of my head. I'll research that before the conference. But it went over 70% by the end of World War II because there was so much gold that was just flowing out of Europe, away from the tyrants, away from Hitler, Stalin, Mussolini. And there's some crazy stories. There's a great book. I've mentioned it before. Definitely, it's called Chasing Gold. It's by George Tabor is his name. It's actually a riveting book. It's a great history of World War II, but it talks about literally step by step how one or two central bankers of Poland or of Holland or of Norway had to get gold on a ship, and they had to get that ship to London, and eventually they had to get the ship to the Caribbean. Eventually, they had to get the ship to Halifax or to New York, and just how difficult this process was. And there's this percentage. It's like it's a naval, it's an age old seafaring thing that I can't even remember the percentage off the top of my head either, but it's like 2 or 3% you got to give to the captain. So you have your transaction costs right there.
Yeah.
And it just, let alone all of the other dangers of just getting the thing bombed. And it did happen often, like it's gold at the bottom of canals in Holland and everything, just let alone the danger. And then you get the centralization risk, which happened, as we know, in the US. So anyway, that was a little tirade myself on that little, what you were starting out there. But it's really weird because I remember like trying, when I was doing this libertarian journey, like trying to talk to, I speak with a lot of embassy people here living in Eastern Europe. It's a little bit, easier obviously to speak with those types of Americans, diplomats, foreign diplomats when you're close to embassies. And they would never like agree with anything I'm talking about, like free market economics, Austrianism, or like the gold standard at all. Like you said, there's different reasons we believe why the gold standard failed. But it's just amazing. And I said this on Peter's show as well. It's just amazing that Bitcoin is like, it's permeated through not only that, just like blasted through any problems or any sort of mirage that people had with the gold standard, which again, they had it for, in our view, wrong reasons. But it's blasted through that, and it's permeated like not even libertarians, not even anarcho-capitalists, not even Austrians. But, as I said on Peter's show, it's like progressives, there's socialist Bitcoiners. It's very interesting. I don't know if you have any thoughts on this sort of the different types of political persuasions that are attracted to Bitcoin.
Yeah. As I think as a world right now, we're so divided. And if you really look at some of the fundamentals of those different political persuasions, I think there's a lot of agreement. Um, it's like there's like it seems to me that there's kind of wedge issues that have been driven between them, and you know, I'm like, it's so cringy. I'm like this guy. It's like, well, we have a chart for that, but I have a chart for that on the website that shows political division that that gets drawn apart post 1971, and even political discourse getting stupider post 1971. It's also, to me, it's almost also kind of cringe when I hear like fiat this, fiat food, fiat that, fiat everything. But I do think that there's definitely an air of truth in it, that like we have, created a monetary system that has distorted value systems. It's distorted value incentives, and it's drawing us apart. Because I think fundamentally, if you sit down, a lot of these people agree on some core issues, and it's like these wedge issues that has seems to have driven us apart. So no, I like it too. I haven't like read Progressive Case for Bitcoin or whatever, but certainly I edit Peter's show, and certainly Peter is the one loudest voice by far that's putting out the progressive understanding of Bitcoin, and I enjoy it too. I'm not I definitely wouldn't consider myself progressive, but that they're Peter loves ragging on Elizabeth Warren. She's so easy to rag. It's almost like too easy, but she hates the banking system. She should fucking love Bitcoin,
Yeah.
because Wall Street, Occupy, all that stuff. So it is cool to watch, because I think Bitcoin's realigning incentives. So I don't know how much deeper I could go than that.
I've seen your charts for years, and I think a lot of people have, right? And I'd love to hear like the genesis story and like how you they're so illustrative, and people grab them all the time, and I'll see it in my Twitter feed, and I'm like, oh yeah, I forgot, right? Like that one. And so for me, right, like just the backstory and why it's obviously like a passion project. So I'd love to hear more.
Yeah, I mean it's pretty simple actually. Me and Clown were trying to figure out monetary history all on our own, just from first principles, just as Austrians, and we were just researching. It's like, oh, there was this gold standard Bretton Woods thing, and we were like literally on the Wikipedia pages, right, just like reading about them. And one of the first few charts, actually, first two or three, they're actually not in order, but like the first two or three charts we put up on the site. One was that productivity pay gap one, which is like the iconic one for the site. It's like the first one. And then there's another one that's like really sticks in my mind, which is the trade deficit chart. It's kind of blue, the background. I know that one came from one of these pages, like the Nixon shock or Bretton Woods, like Wikipedia page. You go there, you see it. And it's like, that was the genesis for me in my head of this site, because it was like, here's this chart. And I think it almost had an arrow. It said the like end of liberalization of trade. I photoshopped that out of it, and I just drew an arrow. And because if you dig deeper, you learn that like about the Triffin dilemma. You know about the Triffin dilemma, Matt? I've actually pushed back on Snyder's use of this term. He doesn't understand it at all, in my opinion. But
Interesting. Yeah. No. I mean, I
we can get
I
into
know
that.
his definition. Yeah, we can do it now or later. Definitely.
Let's finish this, and I'll loop back
Yeah.
to it, because
Yeah.
it's simply just that if you read the definition of the Triffin dilemma, you look at this chart and you understand the end of the monetary paradigm that was the Bretton Woods gold standard, the closest thing we've had to a gold standard in 100 years. You realize there's this fundamental shift, and then the trade deficit just goes off a cliff. That we started exporting dollars instead of goods. Um, I just like that clicked for me so much. And like me and Clown, we kind of just like, I wonder what other charts we could find that would kind of like demonstrate, be illustrative of this thesis. And I'll be honest with you, Alec, like some of those charts are just pretty memey. Some of them, maybe you could argue, that, oh, it's second, third order effects or whatever. I don't get lost in that debate. Like I said, the idea of the site is to kind of just get people thinking about like, did something crazy, did something change fundamentally that maybe has effects on society simply. So yeah, we started like, and the other part of it too was just that like we were on Twitter like arguing with people. There's that XKCD meme where he's like he's up late at night, and the wife is like, come to bed, honey. He's like, I can't, somebody's wrong on the internet. Like this was totally me in like my first year on Bitcoin Twitter, that I was just like arguing with everybody. And we had these charts. This is before we kept the site up. And I was like, no, like, look, everything changed in 1971. And we were like trying to look for our phones for all these pictures. And Clown just had the idea. He's like, what if we just put these up on a website? So it's like, that was it. Like, we just put a bunch of charts on a WordPress blog, and it got a lot bigger than we thought. It wasn't like some master plan to like make this meme, but like, 6 months later, you had Eric fucking Weinstein, excuse my French, shilling this to a sitting senator, Ted Cruz, on Ted Cruz's podcast. Like, and then a year and a half after that, you had Jack Dorsey and Cynthia Lummis tweeting about WTF happened in 1971 on the 50th anniversary of the gold standard ending. So it
Yeah,
was
good for you with that.
it was
That's
crazy,
really
dude.
great. Any other stories about that? Like notable quotables?
I don't know. I mean, there's definitely like, do you know Mike Maloney? Probably do.
Yeah, yeah.
Mike, so he did a whole like he did a whole show on our website. He didn't reach out to us. He didn't call us or anything. He just found the website and went Austrian through each chart. So I mean, there's like
Nice.
it's well beyond, like, I can't even keep track of it anymore. Like the stuff we've seen it. And to your point about the progressives, Matthew, like, we've seen the site on like on Bernie Bro subreddit. Like, it appeals to everybody. Everybody's like looks at it and they're like, wow, something crazy happened. It's not just like Austro libertarians that see it. And people have their own thesis sometimes, because that's for the Socratic kind of method that we have. You get people that will answer it in however they want to answer it, and that's fine too. But yeah, no, I I don't have off the top of my head all the crazy stuff that's happened, but those are the big things. So I definitely want to jump into that thread that we had there. What was that?
No, kudos to you, regardless. But yeah, we were talking about the Triffin dilemma, which
Yes. Ooh.
why don't you define both? Because I haven't brushed up on it, but my understanding it has to do with, yes, the dollars being demanded abroad and also the dollars exported abroad. But why don't you lay it out both the way that you understand it?
And Snyder's
Yeah,
misuse of it.
yeah.
Yeah, no, you nailed it. The dilemma states that a country who has a reserve currency must supply the world with said currency, because it's the reserve currency. Everybody else needs it, right? It's very simple. And thus, they essentially must export their, let's say dollars, right? And it creates a trade imbalance. So that is true. Like, but what Jeff Snyder says, he misuses it, because he says you must continually expand the money supply in order to do this, and that's not true. You can supply the world with your currency with a hard capped currency. It just means that you would have a huge trade deficit, and it turns out you can have a huge trade deficit even if it isn't hard capped. So he uses the Triffin dilemma, which is, I encourage people to just go look this up, because it's really important. This From a monetary economic standpoint, if you want to understand the end of the gold standard and where the U.S. is, the hollowing out of the manufacturing base of the United States, our rise kind of to monetary power, and now maybe our decline in monetary power, and how all this stuff ties in, I actually think that this concept is really important. But Jeff Snyder uses this now as an excuse or a reason that we must continually expand the monetary supply, and that's not what it's saying at all. I mean, you can reason from your own principles that you just used, right?
Actually just did a series on the national debt, and so the numbers are like fresh in my head. Let me just tell you the
Okay.
numbers and then get you to jump in. So, the national debt's 30 trillion, 30 plus trillion right now, and the Federal Reserve, as of this moment, owns 25% of it. So that literally is 25% ex nihilo money created. They put it in the banks. They buy Treasury securities, so they own 25%. But it definitely has not been that way. In before 2008, it was sub 10%. It did go up a little bit during the Vietnam War, above 10%, maybe 18% if I remember. But then way back before that, World War II, even all the times before that, it'd be sub 10%. When the Federal Reserve started, they weren't even buying bonds at all. They were buying corporate paper. 1% they would have of the Treasury debt. So just to say that, like, it's definitely jumpy, and it's been in, let's say, before 2008, 10% or even below 10%. Now 25%. It was even 30% last year, 2021, when like the biggest pumps of COVID were happening, of stimulus and everything. So it's definitely jumpy. But then I think what you're saying, which I agree with, like, you can totally have a government. Again, I know we like anarcho-capitalistic theory, but you can totally have a government that doesn't print money. I mean, governments can run deficits and issue bonds, and you pay
Yeah.
debt. You don't need to print money for that to happen. So I think you're alluding to that.
Exactly. But I think like Jeff Snyder understands. See, let's explain for the audience. Like, I actually am a student of Jeff Snyder, and I think he is brilliant,
Yeah,
and he
agreed.
understands parts of the monetary system better than probably anyone else in the world. But it's funny because I think he doesn't understand monetary economics and the fundamentals of money, as well as Bitcoiners. A lot of Bitcoiners understand that better than him. So it's funny, but this whole thread of like I definitely want to get into. We talked about offline, Matt, the QE argument as well.
Hmm.
Like this is the problem with the fiat system, is that like it's so insane and crazy and hard to understand that literally, just even as like, if you dive into this stuff, for me it's hard to even talk about some of these things when you get into like how complicated it is with the reverse repos and all this stuff. But to your point, like the the governments definitely don't have to print money, and I can make both the statist and the anarcho-capitalist arguments. And I think on the states exist, right, in everywhere in the world that has people, pretty much, that that inflation is not necessary, printing money is not necessary. You can simply just tax your citizens, it turns out, right? And so like if you're somebody that's arguing that, oh well, we must print money to do X, it's like, well, you can do the exact same thing just by taxing your citizens, and it changes the incentives. um, it changes the incentives really in a big way.
You're literally just quoting something. Like, I just put out this short. I was talking to Alec with it as well. Like, in the 1850s, after the Civil War, there was a 30x increase in the national debt. But from 1865 to the end of the 1800s, basically the start of the 20th century, there was the debt was flat or even down at times. It was flat or even down, and that was the greatest increase in a world economy, in a nation's economy ever in the history of the world, was the U.S. in the latter half of the 1800s. So it's a total example of like, you don't need the debt. You don't need, first of all, you don't even need deficits to have a growing economy, and you certainly wouldn't need to have. There was no central bank then either at that time. There were
Right.
bad banking regulations, which you mentioned, free
Interventions.
banking. Yeah, they're
Yes.
very bad regulations in the United States as opposed to Canada and Scotland. But we don't need to get into all that. But
But that period overall was like
yeah,
the most free. It was like the most hard money kind of that we've really
yeah.
had in 200 years or whatever, right?
Yeah, and the debt was flat. It actually went down. I went a little bit back up towards World War One, but overall it was flat for 50 years.
Yeah.
And that was the best growth that the United States ever. I think like maybe China matched it at the start of the 21st century, but there's never been any growth like that ever. And so there you go.
And I know you like data. I have a really great chart that kind of tells part of that story. It's a CPI chart, but it's really long term, and it has it's the like actual price level. It's not like the rate of increase, and you can see during
Hmm.
that period there are little it goes up, like there is inflation, but then there's little periods of deflation.
Hmm.
And so like the market kind of corrects itself over that time period, and then you can see 1913 it starts like kind of just slowly creeping up, and then it goes crazy in 1930
Yeah.
33, and then 1971, of course. But that
Yeah,
chart
that's a
is
real W2F, 1971 right there.
but that chart is awesome, and it tells that story of monetary history. I recommend people go check that one out. It's the price level, like
Hmm.
since I can't remember, 17 or 18 something, that shows that whole story. That little bits of deflation don't hurt you.
So do we need to do the inflation deflation argument now, or is
Oh
that
my
too?
god, I'd
That's
love
like
to.
quicksand. That's quicksand for a lot of people, though. I don't know if it's with a hard cap Bitcoin base money standard. What happens to prices over the long term? Do you have thoughts on that?
It's insane to me, Matthew, that anybody would ever argue that they want prices to go up. Like everybody literally
Yeah.
in right now is complaining about prices going up. So how are they arguing that that's a good thing? Like, it's so insane, the mental gymnastics that, oh, if prices don't go up, I don't know, maybe I'll save more money.
You
Maybe
need a
we'll have less
raise.
debt, right?
Everybody needs a raise, apparently.
You right now you need a 6% raise every year in order to make the same amount of money, not less, not more. And last year it was 10% in the United States. I don't know how it is out there.
Oh, it was Eastern Europe was like 20% last year.
Insane. So like,
Even though I hate quoting price inflation indices for the record because I don't believe them, and I think they're higher than they are.
right? Oh, absolutely. That's a whole separate discussion. I think we can just kind of shelf for just a second, but we can we can give a hard time to Jeff Snyder on this one too, because he and I think instead of just giving him a hard time, I'll actually give him credit to say that it understands that if we do not continuously expand the money supply, what we see around us will need to kind of reshuffle itself, and that might be a very painful process. That this embedded growth paradigm that we've created because of this inflationary paradigm is due to the fact that we have indebted ourselves. What were you just talking about? 20 to 30 trillion in how many years? That our debt just continues to rise because of the incentives of inflationary paradigms. That the debt itself is cheaper to pay back in the future, so you're incentivized to take it on, and your savings aren't worth as much, so you're less incentivized to hold those. And that also, like a fiat paradigm, which is not just inflation, it also changes the risk calculation at an institutional level. That 2008, the explicit and implicit guarantees that a lender of last resort provides changes the risk calculation of those creating most of the money, which, as you well know, is not necessarily governments; it's commercial banks. It's people lending money into existence. I'd love to get on that thread as well. That's separate to my point, but that it's this incentive system has created a situation where we are so indebted at every single level of society, the personal, corporate, and governmental level, that now the only way out is either massive pain or keep printing money, keep the can kicking going. So that is what Jeff Snyder is identifying. He is not saying we have to expand money because that is the only way to function. He's saying we must continue to expand the money supply, otherwise we get 1929, we get 2008 type things,
Right.
and that's true. And I agree with him.
It's
Right?
the same thing Ben Bernanke said, told Milton Friedman his 90th
Exactly.
birthday.
Exactly. So,
well, let's stick with let's hold off on the debt because I agree with you. That's a whole other thing. But regarding the prices, it's a tough one. I think there are some people that really think Bitcoin is be damaging there, but everything is done on the margin. I mean, when you're if prices are falling for consumers, it doesn't mean like you might not get a raise. I mean, you could still earn money. It just means your own costs are falling. Like everything can fall and fall and fall to like very small fractions. I mean, it's never been tested like in a vacuum, but we know that in the 1900s and the 1800s and, basically any time there was a relatively free hard money standard, also without a central bank, that prices stayed stable or even gradually fell. So I don't know. Why are people so worried about the Bitcoin 21 million hard cap?
Well, Matthew, to be fair to them, falling prices are terrible for the industries, especially if you consider, like Apple and Huawei and, Sony and all these technology companies that are they can't survive with all the falling prices in the electronics industries, right? Like it's over for them, right?
Yeah. Yeah.
Everybody hates falling prices except for people that love falling prices.
I try to do like devil's advocate with this thought experiment, but I don't know. I can't. People really like to push on this idea. They think that it's impossible. The fact that Bitcoin is fixed, the base money is fixed. It's a capital D deflationary spiral that's just gonna cause the depression.
Deflationary spiral is great. That's like a utopia to me. Just like as a quick kind of like I think cap on that point. Jeff Booth's book is great on this. Jeff Booth's book, The Price of Tomorrow. I haven't read his other one yet. I'm just so busy, but it's an Austrian economics masterpiece that's like written for people who aren't into economics, and it briefly states that like we as a society are experiencing technological revolution right now. We are at the like forefront of, or we're at the precipice of like an AI revolution probably that's going to massively increase productivity. I think massively reduce prices, and we are in a paradigm where we must target as a percentage prices to go up, because otherwise these systems break, as I was saying, 1929, 2008. So essentially, if you accept the I think fact that we are starting to see almost an exponential, maybe that's the wrong word, but like some kind of geometric increase in productivity, and hence an accelerating decrease in prices, in real costs, that means you will need an accelerating exponential increase in money printing, which I argue distorts incentives and creates wealth inequality, or not creates, but distorts, increases wealth inequality. It draws us apart. And the people that can protect themselves from inflation are people with financial advisors, trusts, assets that, the poorest people in society can't hold assets that go up in inflation, blah, 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 blah. We're going to get in exponentially, like just absolutely just like our society is going to be torn apart if we don't embrace deflation, embrace prices going down. Again, remember, people, prices going down is a great thing. It just means that debt gets harder too, so you'll be less incentivized to have debt.
So, but on that topic of AI is deflationary, which I agree with, but isn't it also true that you could just get a lot more? I mean, we're talking about it in my kind of like day to day, right? Is all right, so we can do a lot more with the same number of people, or our products can reflect a lot more with like the same level of effort. And so, in order to keep prices the same, the client just gets a better product or more experience, or a sustainment of that service over a period of time. And so is the outcome necessarily the same amount for less, or is it just like a greater volume of quantity?
Both. And why not? Por qué no los dos? You can see both of those things in the electronics industry. You can see that either prices outright decline, i.e., in storage technology. This is, look at memory cards over the past 10 years. It's crazy. Hard drives, SSDs, or you can see in more like cars or computers themselves. Like you look at the average price of an Apple laptop, or most laptops, you'll see like it stays around 1,000, 1,500, somewhere around there, but you get much faster processor, you get better, more RAM, more everything. So like, or in cars it's the same thing. You see like either the entry grade consumer cars around $12,000 to start MSRP or whatever, but every year it has like and now it has anti-lock brakes as a standard, now it has rear cameras, and now it has a entertainment system in dash, and blah blah blah. So like you'll see both of those things, and it doesn't matter, they're both the same phenomenon.
Yeah. And so where do you see the disruption in the labor market, right? Obviously some things go away, but then productivity goes up. And we've seen this, like, and there's people that articulate it much better than I do, but every time there's a new technology, it's like, oh my
Yep.
God, everyone's going to be out of jobs, right? And this was true when ATMs came out, right? It's like, oh, it's the end of bank tellers, right?
And
Yeah.
they're also, just to add on to that as the question, they're also saying that UBI is needed
Oh yeah.
because of this. So
I know they
yeah,
are, Matt.
how are you responding to those?
Well, I know I tried to
claims?
touch on this in Peter's pod that you tried to shout out at the beginning. So thank you. I do recommend people watch that a
Mhm.
little bit, but we can go a little deeper. The book that we did the podcast about was called Economics in One Lesson by Henry Hazlitt. It's a great book.
Fantastic.
It's such a great foundation in the ways that you can approach this topic of economics and try to avoid logical traps that I think Keynesians fall into so often. And the whole book is written from the perspective of like the 40s and 50s, looking back at the early 1900s, which the early 1900s saw massive revolution in automation, in manufacturing, and machines replacing humans constantly. And Matt, like I have to ask you, like, and Alec, like, are we better off as a society without the buggy whip manufacturer, or the buggy whip manufacturers? Do you know this term? The buggy whip manufacturers? Alec doesn't know it. Oh, great. I love it when I say this and people don't even know what I'm talking about. They're like people that had to manufacture the whip that you would hit the horse, for your horse and buggy. That
Yeah.
like they were worried. This was like a trope back then. They were worried about the people that manufactured those as we moved to horseless carriages. And the telephone operators. Are we better off as a society without telephone operators? Now, let's bring it into the future. Okay. All right. Ben, you're talking crazy talk. Like this is absolutely no, this is so fast now, that like what are we gonna do as a society? We need this UBI to pay for all this stuff. Okay.
Mhm.
First of all, you're stupid. Because think about it. You're saying that the amazing benefits that we saw in the 1900s and the 1950s that I just explained, now we're gonna have those at an exponential rate, and we're worried about it. With the real worry, the part that just gets us that we don't know how to deal with, is that like what we're going to need is a reshaping of how society functions around these much lower costs, the much more power, fundamental utility that we have with the technology that we're creating, and how quickly that's going to change. That I will admit, there are a lot of questions about it. But if you go again back to the fundamentals of this book, is that you know it takes an immense imagination to know what would or wouldn't exist with or without a government policy. And the UBI, I know that there are massive detriments that we can get into, but what we don't know, what we are afraid of, is the unknown of what it will look like and how that transition will happen. And I don't have answers for everything because I cannot see the future. That economics doesn't teach you how to see the future. It just tells you how to approach these things. So what we are seeing right now as society, grasping with this technological revolution that's happening at a crazy pace, and you can see it on Twitter. But I think we are taking, at least me this week, I'm taking a step back a little bit and saying all of those, TikTok videos and YouTube videos you've seen of like, oh, this thing is like just started an entire business for me and made me $1 billion. Like, there's there's a lot of clickbait and all this stuff. Like, the technology is advancing rapidly, yes, and it's increasing productivity, and yes, it's absolutely amazing, and yes, I'm increasingly using it even in my own production processes, in the podcast, and in my life. But it is not replacing humans at an exponential rate, at all. Like, if you go drill down into this stuff, Auto GBT was one of the more recent innovations where essentially they, if you're not familiar with Auto GPT, I think most of the people watching this have probably at least heard of the Chat GPT, where you can type in a question and get a direct answer to your question. And 99% of the time, it's actually something that's extremely useful versus typing something in Google and getting a list of web pages and not an answer to your question. Google can only tell you like what temperature it is or like what the price of Bitcoin is. It can't tell you like the answer to like a complex, nuanced question. These things can. So what they did with Auto GPT was, well, sometimes they you would ask it a question and it would have a half an answer or it wouldn't get to a solution. So they started like feeding back onto itself and like having it keep asking itself questions and criticizing itself and trying to get it to get better and better answers. And every once in a while, this is actually an amazingly powerful technology because it can get itself to the right answer. But they're still not showing you the 99 out of 100 times that it just fails. It goes into a loop. It doesn't get you the right answer still, even though it's trying to do that. So this approach to quote unquote AI is actually a very wasteful. It's a very inefficient way of getting to like if have you either of you guys played around with the mid journey or image generation stuff? You have.
Yeah, yeah,
You've like personally played around with it, like tried to get
yeah,
it to. So
yeah.
did you
It's
notice
it's frustrating.
why is it frustrating? This is my point.
What is it, first of all? Sorry.
So you can type in a string of text, Matt, and it'll generate a picture. You've seen this, right? This is
Oh yeah, like the AI
Dale or
picture.
Mid Journey or Stable
Yeah,
Diffusion.
yeah, 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 yeah.
Generative AI, they call it.
Yeah,
So
yeah, yeah.
Alec,
Yeah, well, I was just say it's cool, right? But and you're doing it, and you're like, wow, I see where this could be transformative. And I occasionally see outputs of it. I'm like, oh, that was spot on. But for every one of those outputs, and you can see it in your history, right? If you use it, it shows your image history, and most of them are just like confoundingly wrong.
yes,
And but I'm still like very excited about it. And I think the gap between a good idea and the implementation of it is narrowing,
of
right?
course.
So like now someone doesn't have to have 500K to hire a dev team to build an app, right? Or we're very close to that. So a 19-year-old with a good idea can, have a business. Like, I think that is legitimately where this goes. And I think more opportunity comes from it, but it's not today, right? I'm totally with you on this, Ben. And I think if you read a Twitter feed, you're like, oh my God, like if I don't have an AI business started by the end of the month, I'm done.
It's so
right.
funny.
And look at this guy, like he just made 100K this week, right? I mean, cool, right?
Yeah.
Not there.
To wrap the point up, the actual approach that we are using to AI today is more of the generate 100 ideas, and one of them will be a really great idea. But there's 99 other ones that you have to sift through, and even the one that's great will probably still need a human doing a little bit of editing to make it great. And that is a fundamental approach to this AI. It is a gradient descent. If you want to get into the technicals of it, where they're like taking an idea and like draping it over a gradient and it's like rolling down a mountain to arrive at the right answer versus like an actual computation of saying logic and reason and like deducing an answer. It's not doing that. It's just following this neural network and trying to like diffuse into the right place. So we're not seeing what you're seeing in these clickbait things yet. So
yeah, but let me ask one more thing on this, because so we're at an inflection point where like I can use ChatGPT or other things, and I find the most value in things where I'm already fairly knowledgeable, because it works in the nuance and it helps fill in the gaps and it gives me like a bigger brain.
Exactly.
But it's in other areas where like I don't know much that I'm actually kind of challenged by it. But like I actually know how to write and I have some skills, but 100 years from now, where all you learn is, prompting, I see like that there is a gap there of like not having predicate knowledge that makes AI like, I don't know, you just outsource your whole brain. And I think there's like an atrophy in that potentially.
Absolutely,
And
but we've
so
seen that
I'm
already,
not,
Alec. We've seen that
yeah.
already. Look at the generation raised on autocorrect and spell check, right? And I
Mhm.
was a generation that was raised, and it was kind of coming up as I was like 10 years old, so I'd already kind of started to work without it. But then I learned to use it as a tool. And there are people of the newest generation that were raised in this generation where it exists that both you've seen both outcomes. One that still know how to spell, they can spell on their text or whatever, and there are people that don't, right? There's still incentives to like approach life in a smart way and not just rely on machines for everything, even though machines can do a lot of things. So the incentives are still there, but certainly it allows for people to, and I think you can find other threads. I don't know if you're understanding my what I'm trying to put forward there, but like just because the technology exists that makes something easier doesn't make us all stupider. It's people that are lazy that make themselves stupid, and I think that only is a detriment to them in the long run.
Sure, but we're making it easier to survive in that lazy, kind of intellectually shallow world
We've
because you
been
can
doing
still be
that.
successful.
We've been doing that all throughout society in many
Sure, but this is like a leap forward in
ways.
that
Maybe,
for sure. Yeah, I
maybe.
think so.
Actually, a buddy was going to help me with generative AI for my thumbnails when I started doing YouTube videos this year. And they were so bad, like I had to still do them on my own. It's definitely gonna take some time, but still on the labor thing, I think it is interesting, both your last point, Alec, and then the whole thing we were just talking about, because like, Tom Woods used to talk about this. Like, if you think about, like a king from the Middle Ages or something, he still had to like throw his bucket of shit out the window of the castle. Now, it's just like the majority. Okay, you can't say like everyone in the world, but the vast majority of people, if you're talking about like just the way that they wake up in the morning, the way that like how easy it is for them to get breakfast, how easy it is for them to get lunch, it is amazing. It's unbelievable the deflation that we've actually had on a whole like spectrum. But then I'm still trying to think of the best arguments to tell people about, that the next step when we get, when we get to these next iterations as we're talking about, because I actually haven't read, my question is going to be wrapped up in this, but I haven't read Jeff's book. It's on my list. Just too many things to do. But does he have an answer, or do you have an answer to like, if we, how does that restructuring of society go? Because I don't think it's UBI at all, but it might just be that you're working as much as you work, and instead of not having a raise, you just work less per week. I mean, we already have like a less work week than we had like 500 years ago. So it might just be that you work less. That could be the answer. I don't know if he writes that, but that's what I usually say.
He doesn't get that far in it. But
Yeah.
his overarching point is that if we don't embrace this deflation, we're screwed, right?
Yeah.
Because of
Sure.
this rapid deflationary, it's like vectors. You understand? Like there's deflationary vectors and inflationary vectors, and now we have this like massive increasing deflationary vector that they're going to try to match with this, massively increasing inflationary vector, and that's going to rip us apart. So if we don't do this, but no, he doesn't get that far into like what you're talking about is more like we're getting close to like almost the what do they call that, the singularity. Where stuff just gets so crazy.
Maybe not even that far, but it's just like people think, specifically with the wage inflation thing. That gets everybody. Like they think you need a raise, you need an inflationary money supply, you need that. And I just
Well,
of
I
course
tell
I
those
think it's
people, would
bunk,
you
but
rather like not fight? You have to fight with your boss to get a raise. What if you got a raise automatically every year through deflation?
yeah,
Everybody got one from the
yeah,
from the base level, right? And then
yeah,
if you did really amazing and you actually got to the next level and you got a promotion to the next job, then you get a real raise and you actually go to the next level. But you continue getting this deflationary raise all the time.
yeah,
That's amazing. And
yep,
what they don't understand about inflation as well on the other side of it is like, oh well, I keep getting a raise every year. And if you actually track it like CPI, we can debate CPI all the day, but like if
yeah,
you track it, wages have actually tracked CPI like even over the course of the last 100 years. What hasn't is your savings. Your savings is still losing to inflation. If you saved up 100 grand,
hmm.
it's like 99% gone over the last 100 years, and that's just as important.
I'm not even sure wages have been. I don't know. John Williams from Shadow Stats, he does I'm pulling deep from my memory here, but I'll check this after the show. I'll post it. I'll put a picture up even as I'm talking right now if it's right.
Okay.
But I'm pretty sure he has a chart that even shows real wages of his estimation of inflation, which is always at least double the index.
Yeah.
And he thinks that that's fallen since like 1971, meaning real wages have not grown. They have not kept.
I agree by his
Yeah.
data. That's what I was saying. I'm saying if you trust the government data, they've actually tracked it. And I was just
Yeah.
trying to make a point. But
savings as well. Yeah.
savings as well is an important point you have to
Savings
bring
is
up to these people.
probably the main thing as far as saving for the future. So, yeah, fascinating stuff. What else? We've covered a lot already.
I want to throw in one question, and Ben, you figured out now that Matthew brings me on to ask non-economics questions. So, but you at the very beginning of the show mentioned kind of like the potential waning of the U.S. dollar hegemony and as the de facto um, reserve currency. So, what does that actually look like, and where does the global economy turn for reserve currency? Like, what do you see as like, okay, we can make that statement, but what's next?
Well, I think you know what I'm going to say. Well, no. I mean, the zoom out for me, and this is the point I keep taking, which is I don't know why isn't more obvious to people. They're talking about BRICS nations, Russia and China. They're gonna usurp the reserve currency. Sure, they could try, but the reason that people are moving away from the dollar is because of a distrust of the United States, which I think is well founded. I don't really trust any government. But you have to ask yourself, do people trust Russia and China more? And I think the answer is almost always no. And that's the problem with fiat money is it's trust. It's all about trust. So I mean, you can take this discussion in a few different places. You can look at them. Actually, John Maynard Keynes himself suggested the Bancor, which is kind of interesting in the around the 40s, I think, just before Bretton Woods, as a neutral reserve asset. They kind of actually brought it to fruition with the SDR, special drawing rights. And it didn't really work. It's hard to bootstrap the liquidity of one of these currencies. Plus, they only used it for central bank settlement, kind of probably predatory loans and such. But that's another topic. But obviously, I think Bitcoin is the neutral reserve asset. Bitcoin is the Bancor, really. It's something that nobody can control, that nobody has to trust. The problem is, to really answer your question, is it's not ready yet, Alec. It's not ready to usurp the reserve currency, I think. And the way it would be more ready is, sure, you can say, oh, we need better devs and UX and all that stuff too, but it needs more liquidity. Like essentially it needs to get bigger before it can get bigger, which sounds stupid and tautological, but the liquidity is king in currencies. So the other thread I would tie in here is, people are talking about like, oh, USD is going to lose reserve currency status. Sure, that can happen. It's a long process. It takes probably 10, 15, 20 years. Arguably, you could say it started already 5 or so years ago. Macro Voices did the whole thing on the Eurodollar University. Actually, at the end of that, they said US dollar endgame. So you can go watch that series. They talk about some of the stuff, how long it takes, etc. I do think it could be a process that's underway, but it does not mean, by definition, that the U.S. dollar is going to hyperinflate at all. In fact, you can see Britain lost the reserve currency. You were just showed me before this about Britain and them and their debt. I think Matthew, just before we got on. But regardless,
it was U.S. It was U.S.
Oh, it was U.S. Okay.
Yeah, it was U.S.
UK used to have reserve currency before us, 100, 150 years ago, and they didn't hyperinflate their currency when they lost the reserve currency status.
Yeah.
So that anybody that's saying that is really stupid. So be very, very wary if you see that. So I know there's a lot of threads in there. I guess my point is that I'm not as alarmed by all of this happening. I've already knew it was probably on its way, that the U.S. dollar is kind of waning in its hegemonic power. I'd love for that to be Bitcoin. I think that the same way that it takes a long time to de-dollarize, and the reason for that, by the way, the why it takes so long is because A, liquidity is king again. B, because all of the debt, which is money, as Matthew touched on, the debt is money. The treasuries are money for the banks. That is all denominated in the dollars anyway, and you can't just like overnight roll that over. You can't just turn it over. It takes time. this the same thing with Bitcoin is it just takes time on the other side too. So my awesome case for the next 15, 20 years is that Bitcoin just builds and builds and builds. I don't really care who has reserve currency status in the meantime. Maybe we will see a multipolar world, which sucks because when you have one currency, it's always better for everybody. It's better liquidity, better unit of account, better just that's it's
Trade.
monetary economics. Yeah, for trade, exactly. It is a better at doing what it can do, because it's money is the most liquid good. Liquidity is king. That's what you really have to understand this. And I'm not one of those people that's going to predict out. I'm not going to say, oh, well, it's going to be bricks or it's going to be this or that or that. Like, I have no idea. But I just know that these processes take time, so I'm not as worried about it, I think, as some people are.
Yeah, really interesting.
Yeah, I totally agree with you. I mean, there's so many good points wrapped up in there, and it really is. There's so many vectors as well. You got to think about. There's no really one. Really finding that blended weighted average of a direction to move in is difficult, especially when in this fiat world. That rings home with me. What do you think about like someone like Michael Saylor, who's such a Bitcoin bull? Yeah, he's also got a very concentrated stash of Bitcoin in a concentrated place, maybe number one. And then number two, in the position that he's in, he makes the case always that there's going to be a strong dollar. Like it's strong Bitcoin, but it's also strong dollar. You think he's just talking like his sort of regulated book, being a regulated company, that he's sort of saying that the dollar is still going to be number one in this, but, Bitcoin's the reserve asset. What do you think about some of the points that he makes?
Okay, well, there's a few questions in there. I want to try to address at least two of them. One, one was that does he has a lot? Okay, for sure. And then the other part is about the dollar. I think those are the two main points. If you want to re-ask the other ones,
Yeah,
But
yeah.
the first one, he has a lot of Bitcoin. So do some Bitcoin whales. Probably you've never heard of. Probably that don't have Twitter accounts. Nations probably have a bunch. Probably North Korea has some. Probably Russia has a bunch. None of that bothers me at all. Hoarding money doesn't bother me. You can talk about like the risk of like, oh, it's like whatever percent of the supply, and then like you said, maybe like I think you alluded to the fact that like, well, what if it's centrality or risk of
Yeah.
it maybe moving into different hands because of the way it's custodied or whatever. Sure, but like
It's more of a risk to him than you and me, for sure.
Exactly. That's my point.
Yeah.
None of that bothers me. So you got to dig into like hoarding and saving, and that's good for everybody. Actually, have you ever heard that Pierre Richard argument where it's like hoarding money actually confers a benefit to everybody else under their sound money system because it increases the value of all of their money.
Mm-hmm.
It doesn't get you anything. And if you want anything, you have to get rid of some of that money. So that doesn't bother me at all. But I'd love to get into this like strong dollar thing. Michael Saylor, he was definitely put on a pedestal early on. I think he is a very smart guy. I think he is very articulate. He's good at analogizing Bitcoin as well, but that doesn't mean like he's Bitcoin god or anything. However, I think this thread is really interesting as far as like dollar, Bitcoin coexisting. Will they even be complementary in the future? I think it's very possible that Bitcoin may help accelerate some of the demise, and I use that word. I don't use that word lightly. Of some like really weak fiat currencies, especially of like smaller nations, because I think Bitcoin can seep into those nations and it can provide actually a better money. Like look at Argentina, look at Turkey, look at obviously Venezuela. It didn't save any of those countries. It's not saving any of those countries. But like if you look at the chart of Bitcoin, it's like exponential number go up in those currencies. It can be a great tool for those folks, and it may in the future be big enough for like some of those countries to even completely de-currencyize and Bitcoinize. I could see that, and that may actually cause hyperinflation. By the way, I rarely throw that term around as well. But the dollar, I don't see that, or the reserve currency, whatever it may be, per our previous discussion. I don't see Bitcoin destroying that reserve currency. In fact, I think it'll be like it'll be like fight night between those last two things. I think other countries, instead of Bitcoinizing, will probably like dollarize or reserve currencyize alongside, while they kind of Bitcoinize in the background from a more bottom up level. But it is very interesting, and I wanted to bring up and shout out my friend American Hodl. You've probably heard of him, but most people don't get a chance to like talk with him on almost a daily basis. I hang out with him on Clubhouse all the time. And he's a really smart guy. You know, again, I'm not going to put him up on a pedestal, but he's very, very bright. And he understands the world a little bit different than me. So he and I have kind of a slightly different position, but I'm going to bring it up anyway because I think it's interesting what he says. He thinks that countries like the U.S. May choose to actually back their currency with Bitcoin. And you probably heard this before. It's mentioned as an idea, and I found it surprising that somebody like he would say it. That like the U.S. itself, like even the U.S. may say that their currency is at least partially backed by Bitcoin. I think it could happen. You know, I'm not saying I don't think it seems weird to me that they would do that, but at the same time, he's kind of convinced me that it's a possibility. So I think that would be an interesting turn of events as well, because it as Bitcoin becomes more legitimate, people might see that as a move that now the U.S. dollar is more trustworthy because it's actually backed by real Bitcoin. I don't know. I'm not sure how it'll play out, and I'm not sure you like that answer, but it certainly is interesting to speculate on.
Well, my old co-host Fernando Ulrich from Brazil, he used to study Austrian economics under Jesus Huerta de Soto from Spain, and he used to say that the central bank that fully reserves gold or anything of the like is kind of like the virgin prostitute. So it's just an interesting way to look at it there. I mean, like, it definitely seems like a paradox if you are going to be in the game of printing your own money, that you're gonna back it with a sound money. You know, we know that, of course, they do own a lot of gold. I made this point as well with, I don't want to be too long on this because we're getting close to the end here, but it's a tough one for me too. I don't quite see it that way, and I also even get worried about the long-term repercussions of even something like a Caitlin Long. I've mentioned this before. I think I mentioned on Peter's show. Like, I like her. She's been on my show. She should definitely do it. But for me, you know, I always say this. Like, if you want, it's very easy to fully reserve your Bitcoin. I don't.
We should do another episode on this whole thing.
I don't like. Definitely do it if it's good for adoption. If Custodia gets a Federal Reserve master account, and you know, Bitcoin is allowed to be, you know, legally in the United States backed as an asset that's like, you know, legally it's a bailment account. Custodia is fully backed. It's great. Do it. I think short term, I think that's really, really good. But I'm not quite sure how I feel about that long term, simply based on what we know what happened with gold. Like, Bitcoin is meant to be like resilient. These are now Schelling points around the U.S. Federal Reserve and legal tender and state power. And, you know, what happens when Caitlin Long's, you know, 20 years off the board, and then there's a crisis and something happens and we have to do it because things are bad. You know, we've seen this story so many times. So I don't necessarily like a lot of these arguments about state backing with Bitcoin, but that's just me. I don't want to run too long on the point.
Could still happen.
Could still happen. Absolutely could still happen. I'm not even sure if it's good, though, like short-term versus long-term adoption. I'm not sure.
I don't either. We could probably make both cases.
This is great, Ben. Should we end it here? Any other final thoughts?
I'm not a big final thought guy. I think I tried to get all the. Well, I tried to. You know, I spent a whole hour trying to get all my thoughts.
You did, man. It was great.
I appreciate you having me on, though.
I really liked the range of topics today. Really, really good.
Yeah, thanks, man.
Yeah.
All right. Well, where can our listeners find out more about what you're doing, and viewers?
Definitely, I work on what Bitcoin did. We try to put out good, content around Bitcoin economics, all that stuff. But you can follow me on Twitter. I don't tweet a whole ton these days. Check out my website. But I'm at Mr. Cool BP on Twitter, and reach out anytime.
Awesome. Thanks a lot, Ben.
Awesome, man.